You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
This is Mining Stock Education, and I am your host, Bill Powers. Thank you for tuning in. Feel free to engage the show by emailing me at bill@MiningStockEducation.com. Well, today we're going to be hearing from my friend Don Durrett over at GoldStockData.com. If you're not familiar with Don's website, head over there, check out the research service that he provides. He has an excellent website when it comes to researching gold and silver stocks. Website again is GoldStockData.com. Don, thanks for coming on Mining Stock Education again. And as you are now in Nevada, you moved from California, so I hope everything has gone well in your transition. And what is the economy like around you in Nevada there? And do you think we're in a recession, or what's going to happen here?
In Las Vegas, the hotels are shut down, so there's no airplanes in the sky, and so Las Vegas is kind of on hold. I think the Strip employs like 250,000 people, so that's a lot of people that are basically unemployed since the Strip is on lockdown. Then Strip is just shut down. So Las Vegas shut down, Nevada shut down, which is amazing. I don't think Las Vegas will come back to full strength, perhaps never again. Now the question is, will they get back to 80%? How long will it take them to get back to like 80% of strength? I think it's going to take more than a year. So America as a whole, using that as an analogy, I think we're probably looking at maybe a 2-year recession. And maybe when I say 2-year recession, I mean that we come back into recovery mode, like we kind of strength that we were at, February, January this year. It's going to take a while. I don't think banks are going to make a lot of loans, because when you're in a recession, the banks kind of go on hold. They wait. Banks are very patient in recessions. So that's the reason that recessions usually last a while. The last recession in 2008 was short. It only lasted like 9 months. And so this one's going to be, I think it's going to last at least 2 years, and it's going to be sluggish growth. It's the way I see it.
And do you see inflation occurring, a stagflationary environment where we have inflation along with the recession?
You would think that we're going to have recession. We're having more helicopter money this time than 2008. More money's been given away. A lot of money's been given to small business. We've had one check, higher unemployment checks going out on the federal level. So the helicopter money should create some inflation. I'll be surprised if it doesn't. The question is, to what degree, how much inflation we actually get. It's hard to say. A lot of people are calling that we're going to have hyperinflation, possibly, but when? That's hard. I don't know if we're going to get hyperinflation. I don't know when. It might be down the road. I've always thought, I kind of expected a big crash like this. I think we probably would have had, the virus, shut down everything. We didn't expect that. But a serious recession, I think a lot of people were expecting before now. The only reason we haven't had a serious recession in the last few years, I think, is because the Fed has manipulated interest rates and manipulated liquidity and made sure that basically the stock market didn't crash. You could see whenever the stock market dropped, they would inject, their balance sheet would go up and they would inject money. It was like they were preventing a recession from happening, and this one they couldn't prevent. They were even talking, if you remember, they were saying we're not going to have a recession again. They actually were saying that because they were being so successful at injecting liquidity. And this goes to MMT, modern monetary theory. This MMT, that whole term came out of what Japan started doing in the early 1990s when their economy basically crashed in the late 80s, 89, and they've never gotten back. Their real estate prices have never come close to what they were in 89. Stock market's never even close. It's half. It's 50% of less than 50% of where it was in 1989, which is amazing. And they've used, their central banks have injected money, large amounts of money, increased their balance sheet Now the Fed is basically emulating Japan, doing the same thing, expanding their balance sheet, which started after 9/11. And Japan has never crashed, and so their MMT has worked to a certain extent. And America says, well, Japan did it. They never got inflation, so maybe we can do it. But I think MMT is probably going to cause inflation. I think it's insanity, economic insanity. It's basically experimentation. We've never, this is new stuff economically, and I don't think it's going to work myself.
We'll be right back after this word from our sponsor. Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. Some precious metals investors are also proponents of cryptocurrencies, and that's the category you would fall in, Don. So something like Bitcoin, if we get this inflationary situation, do you think that Bitcoin would be a preservation tool for your purchasing power?
Yes. So I've done a lot of research on Bitcoin. I actually have written a 100-page paper on it, which took a lot of research, because if I was going to invest in Bitcoin, I wanted to understand it. And the only way I could understand it was to do research. And, I'm a writer, so I ended up writing a 100-page article on it, which you can get. There's a link on my website. Anybody can read the free PDF. So I understand Bitcoin, and I don't think most people do. And the reason why Bitcoin is a store of value, we actually had the halving yesterday, as a matter of fact, is that Bitcoin is designed to increase in value because it's basically deflationary. Bitcoin is actually now the hardest money in the world. It's even with gold right now, or it passed it up. And the reason why is because every 4 years, the amount of Bitcoin that gets created decreases by 50%. So yesterday, the miners created 1,800 Bitcoins in a single day. Today, the miners only create 900 Bitcoins. So Bitcoin's a global currency. The entire world can only buy 900 new Bitcoins every single day. That's it. That's the demand. That's the creation. That's the inflation rate. That's why I mean the hardest money. So the creation rate, if you look at how much gold is mined on a daily basis, it's equivalent to how much Bitcoin on a dollar basis, how much Bitcoin is mined. So they're mined on an equality. But Bitcoin, in 4 more years, it will drop to 450 Bitcoins. That's it. And so the only way that you can buy Bitcoins is you have to get somebody to sell you some Bitcoins that already owns it. So it basically creates a very small amount of Bitcoin that's available, depending on how many people are holding. For instance, I'm not selling my Bitcoin. You can't get mine. So you got to go get it from somebody else. So in order to get your hands on it, you have to bid a little bit higher. So that's the reason why Bitcoin is designed to increase in value. So if Bitcoin survives, every year that it goes into the future, it becomes more valuable. That's the reason why Bitcoin is $9,000 a day, $8,900 right now as we speak. So Bitcoin, if it survives, every day it survives, that halving becomes more into effect. For instance, you always talk about something getting priced into Bitcoin, the halving. So the next 4 years, every year, so we get out there in 2021, 2022, then people start pricing in the next halving. So it puts upward pressure on the price. So I think that Bitcoin, if it survives, will go up in value. So it is a store of value. I've said that I think it's possible that Bitcoin is actually a more go-to asset, is a store of value than gold. Maybe I'll be wrong, but I think that's a possibility.
I just pulled up the Bitcoin chart, and since mid-February, the chart action actually resembles quite closely gold.
Right, both a store of value.
Exactly, to that point. And I don't own any Bitcoin as of right now. But when it comes to gold, Don, there are those that think gold could sell off in a liquidity crunch if we see that in the general equities. And then just chartists that may not be thinking about the S&P and the Dow would say, okay, well, we need a pullback here because it's performed so well over the last 2 months. If we are going to see a pullback, what would be like some support levels that you might be looking at?
Yeah, I think that there's a really good chance that the overall market sell off. We've had a 61.8% retrace, which is typically what you get when you get a big crash. And then that's as far as the retrace goes before you start having another sell-off. And that's where we're at right now. We had that 61% retrace, and that was as far as it could go. So the S&P hasn't been able to, get over 3,000. It's been kind of stuck there, and the Dow has been stuck at 24,000. And I think that the number to look at right now is probably 23,000 on the Dow. So if the Dow goes under 23, we're probably going to see another significant sell-off in the markets. 18,000 was the low. I think there's a good chance we retest 18,000 this year, but it probably won't be in the next couple months. But I think if I think we probably will retest 23,000 though fairly soon, and then we'll see what happens. The thing about the market is all about the Fed and its injection of liquidity, and everybody's thinking that liquidity is going to transfer into stocks at some point. I've seen some people say it's going to help right now. It's going to prevent a sell-off, or if it doesn't prevent it now, down the road, it's going to end up doing this melt up, and the markets are going higher. And then you're going to see a lot of money continue to be invested in the markets. But again, we talked earlier about this. I'm seeing a 2-year recession. So if you're in a 2-year recession, you're not going to get a big, a lot. You're not going to have earnings. So there's not going to be any underlying fundamentals there supporting these stocks. And so I think that puts a bit of a floor under gold. So even if we have a sell-off, the miners will get sold off, but I don't see how far gold's going to get sold off. The number in my head, and nobody can predict the future, of course, but in my head, I actually think the low for gold, if we have a big sell-off on the markets, is around 1,500, somewhere around there. I don't see it really going much lower than that, and it might not even get down to 1,500. So we'll have to wait and see. But I do see I do expect a sell-off. Anybody that's holding miners that they think that we're in an uptrend and they're only going to go higher, is probably going to have some paper losses here pretty soon.
What about the silver? I believe the last time we spoke, 1850 was a big threshold for you. As we speak now, silver is at about 1550. So what would be your outlook for silver?
Silver, so if you go back to the last 2 recessions, 2001, 2008, 2002, 2008, silver did not do well during the recession. And so we're currently in the recession. And so I don't know when silver will break out, but silver is showing that we're probably going to have some more selling in the market. Silver is going to wait until the selling's done before it breaks out, because silver is right now being treated like a commodity. But then after that, then people start to realize that silver is also a monetary metal, and then it starts getting traded. The fear factor comes in that things could not get better, because people always expect these business cycles to recover and then everything's going to get better. But again, this one, there's a lot of unknowns, and so you're going to start to get to see the fear trade kick into gold and kick into silver. Silver is waiting for something. I think it's waiting for the bottom to get in, or it's waiting for gold to break out further. We might have to wait until gold gets solidly over 1,800 before we see this move in silver. But when silver moves, I think silver is going to move quickly. I think once we get over $18, I don't think there's going to be any stopping silver from finally getting to 1850. And I don't think there's going to be anything stopping silver to get over 20. Once silver gets over 20, there's nothing going to stop it to get to 27. And once you get to 27, there's nothing going to stop it to get to 50. So it's amazing. I mean, that's the way the chart, if you look at the silver chart and the fundamentals, once silver gets to $18, I see it going to a new high. And I said the same thing about gold. Once gold got to 1370, it was going to a new high. And that's what we're going to see. So silver just hanging back, the recession still being treated as a commodity. But once something triggers silver to start moving, you talk about a trend trade. When silver hits, say, $17, it's probably time to buy it because the trend is probably there and it's probably going to start running. That's my expectation.
Don, don't you think that the silver juniors, though, are performing so bullishly and, telegraphing that they expect to move higher in silver?
Well, to a certain degree, yes, but to another certain degree, they're not doing well. I mean, look at First Majestic. What's it at, $8? I mean, that's not really great. I mean, it's doing okay. Pan American, gosh.
Part of that is all their mines are shut down for First Majestic because all their mines are in Mexico. And they have a higher all-in sustaining cost, which is right about around where the spot price is currently.
Right, but if you look at its potential cash flow at higher silver prices, yeah, I get it. It's getting priced for those reasons. I was going to look at Pan American to see what it's currently at. So Pan American's doing all right at 21. It's made quite a run. It was at, it was down at $12 back in March. So it's went from 12 to 21. It's bounced. So you're right. So some of the silver miners are, but Pan American also has gold. And I think that's really helping Pan American that it has gold. If it only had silver, it probably wouldn't be at 21. So the pure silver miners haven't really performed fantastically well. I think they will. I think they will perform fantastically well. The amazing thing is that all of your silver miners back in 2008, they now all own gold mines. There's very few pure silver miners left. Silvercorp just made an offer for Guyana Goldfields. We can talk about the M&A. So they're going to buy a gold mine. Great Panther bought a gold mine. America's Silver bought a gold mine. All of these companies, SSR Mining, they just bought a huge gold mine in Turkey. They don't care about silver anymore. They used to be a pure silver miner. There's very few pure silver miners left. And then the other thing that's bad about silver is that a lot of people want a pure silver miner, and so they buy the smaller ones, the smaller cap silver miners, but they don't have large enough resources to really have the cash flow. There's a lot more risk involved in those.
But they move in a silver bull market, though. They
really could. They really could. There's more risk there. But some of these smaller silver projects, silver properties, those are your only choices. That's all that's left because there's no more big pure silver miners left. Alexco.
We'll be right back after this word from our sponsor. Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. In previous years, Don, when we've chatted, we've talked about M&A, and as I've asked you about various M&A mergers and acquisitions, you were not for them because you're in it for at least a 5-fold gain, and what's a 20% premium? Or a lot of these companies are now doing at market mergers, or they're getting bought out when they're trading at a 52-week or multi-year low, some of them. So I would assume that you weren't thrilled with any of the mergers and acquisitions that you've seen this week.
No, I wasn't. Well, it depends which company. It depends the angle. Okay, so there was two big ones this week. We can talk about them real quickly. So you had SSR Mining doing a merger of equals with Alicer. And so Alicer has all of their production. They're both mid-tier producers, somewhat equal size. SSR is a little bigger. Alicer, all of their production is in Turkey. And so right now, SSR Mining is in safe jurisdictions. And so what they've done is they've added location risk, by acquiring Alicer. And so a lot of SSR Mining investors aren't real happy with it. I saw somebody on my website sold theirs because they weren't happy. I saw another person say that they got a serving of turkey. Right. And so that's the one thing is that now I see SSR mining this actually might be a good thing for them, because what it shows is that they've shown their intent now of what they want to do. They want to grow into a very large gold mining company. This isn't their first acquisition. If they're gonna reach out to Turkey, this means that they're open anywhere in the world. So they're probably, but they're going to try to find something in Australia, Canada, and the U.S. That's probably where they're going to focus. But now they might buy something in South America even. But they're going to be open-minded now for acquisitions. I see SSR Mining as a growth company now. So I'm going to hold it. I do. I see them as a growth mine. This is actually showing their intention of growing. They could become a big company. Now, Alistair isn't really going to, wasn't cheap. They weren't super cheap. They weren't, so they weren't buying a highly undervalued stock, which was their modus operandi in the past. But now what they're doing is they are going to leverage the cash flow from Alistair for another acquisition. So you can see what they're doing here. They're just building up their cash flow. That's what this is. This is all about building their cash flow to grow. So overall, I think it's a good one. Now, the next big merger this was Gran Colombia, which I actually predicted this months ago. I put it in my website saying that Gran Colombia was going to acquire GoldX, but I thought what they were going to do is they were going to have GoldX spend all their money developing and permitting this project, and they were going to wait and they were going to acquire GoldX after it was de-risked and after GoldX spent all their money doing it. But I guess they lost their patience because they said, well, wait a minute here. Gold, it's interesting how these companies think. All these companies, they lead on that they don't believe the price of gold is going higher. They basically manage their company as if the price of gold is going to go lower. But Gran Colombia is going, uh-oh. Okay, they own 20% of GoldX, and they're going, GoldX is super cheap right now. And they're going, gold is probably going to go to $2,000 this year. Gold goes to $2,000. GoldX is probably going to double in value. We better buy it now. So they're basically preempting the price of gold because they know that if GoldX is cheap and the investors are going to recognize it, and I think GoldX probably would have doubled. All these stocks are going to start trending in $1,800 gold. Trending significantly, and a lot of these stocks are going to double between 1,800 and 2,000. So GoldX probably would have doubled. So they said, well, we're going to preempt it. Let's go and buy it now while they're cheap. So in my opinion, GoldX is worth about 10% of, it's a very large open pit mine, and the cash flow, the future cash flow is tremendous. If gold goes, $2,500, the cash flow of that mine is just huge. And so Gran Colombia is just going to, reap the rewards if gold goes higher. Some people don't like this merger because the GoldX project doesn't make sense at, say, $1,500 gold. So Gran Colombia, they're going, wait a minute, we don't want them to build that mine because they're afraid of the risk of the price of gold dropping. But Gran Colombia is looking out to the future. They're going, gold's probably going to go through the roof. We want that mine. Because of the leverage. The leverage is tremendous because of the size of it. I think it's 8 million ounce open pit project, like 1 gram. I mean, it's a really good project. Now, the thing that's odd about this is Gran Colombia said that they want to include Guyana Goldfields in the deal, but it was unsolicited. It's unsolicited. They didn't even go to them beforehand. It's like, and Gran Colombia said the deal is required. The only way that this deal happens is if Gran Colombia and GoldX both say yes. So they made it. You rarely see these unsolicited 3-company deals. This is a really unusual merger here, and for me, it shows a little bit. And I think we're going to see more acquisitions. I actually see this shows that companies are getting really nervous about the price of gold exploding higher, and they want to get in now. They think that in 3 months gold's going to be at $1,800 soon. That's the only thing. Both of these mergers show me that there's a lot of, I don't know if nervousness is the right word, anticipation that gold prices are heading higher soon.
One thing I've been noticing is that Barrick Gold is looking for copper deals. Any thoughts or commentary you can provide on this trend?
Yeah, it's insanity. And Barrick Gold has done this before. We're going in, they're basically, I don't know if insanity, that's too strong of a word, but gold should stick to the knitting and stick to gold production. Copper is a risk because we don't know if the economy is going to come back or when it's going to come back. Nobody's going to be building copper mines for a while. And when is copper demand going to come back? So if they're not going to build a copper mine, why buy one? But that's beside the point. You can see I'm very negative on copper the next 2 years.
He would disagree with you, and Don, I would disagree with you on the copper fundamentals. But in the near term, I understand your point on the demand for copper.
There's always cheap copper plays out there. You wait, just be patient. They should be buying cheap gold mines is what they should be buying. The one thing about Barrick is Barrick has been very conservative, too conservative. They basically base their model on $1,300 gold. They don't want a project that isn't profitable at $1,300.
That's because of past mistakes in the last cycle.
Right, maybe $1,200. Yeah, but I just think that's too conservative. I think they should start looking at $1,400 projects. And if gold goes to $2,000, they can make a fortune. I forgot to say something about the merger with Gran Colombia Goldex and Guyana Goldfields. If you were, and this is very pertinent to this. This is for gold investors. This shows you how you can get killed investing in mining stocks and how risky it is. If you were a Guyana Goldfields shareholder, the odds are you were underwater significantly because Guyana Goldfields has just crashed. The same with GoldX, even more so. So both the GoldX shareholders and the Guyana Goldfields shareholders, both of them probably are getting killed on this because they're so far underwater. And now you're going to end up holding Gran Colombia. Now Gran Colombia, if this closes, probably is going to have maybe 3x, I'll say 5x upside potential. But that 5x upside potential is probably only going to get these, because of this acquisition, you might break even if you're, GoldX shareholder, depending on when you buy it. But if you're a long time shareholder, they're kind of getting thrown under the bus. The only way that GoldX shareholders were really going to get healthy is if GoldX built that project themselves, and then it took off, and then it was a 10-bagger, and you basically got healthy. I was just showing it. So what happens is that if you invest, for instance, in a development stock like GoldX, and as they develop it, it takes a lot of money to develop. There's a lot of dilution involved. The share prices drop. You get way underwater if you buy early, and then they get taken out, and you end up losing money. So on development stocks, you got to be really careful if there isn't a path to production. If there's not a path to production, when I say path to production, I mean they're giving guidance saying, okay, we're going to produce in, say, 2-3 years. There isn't a path to production. You're taking a lot of risk on these development stocks. I just want to throw that out there.
I agree with you. And with those development stocks, you got to make sure that they're cashed up. And then the main thing I pay attention to before I would even consider it is the movement of the underlying commodity. Because we've seen these projects, you get a Nova Gold up there in Alaska, a huge project. It's doing nothing for a while, and then gold takes off, and that stock just doubles, not because anything fundamentally changed, but just because of the commodity and the prospects of it getting built now in this cycle. We'll see, but maybe it'll happen.
Yeah. Development and exploration stories. I don't think people understand just how much risk you're taking on. It's just the risk reward is not great. You got to be really picky, and you got to be smart about it. It's not easy.
What about single mine producers or producers with high all-in sustaining cost? They haven't moved as quickly as the royalty companies and the major gold producers. Any of those catch your eye right now, Don?
One thing I want to make about single properties. So some people think that single properties have more risk than multi-property. And I don't think that's true. For instance, if you compare First Majestic Silver to Mag Silver, for instance, Mag Silver has one property, and so you say, oh, that one property goes down, Mag Silver could go bankrupt. True. But First Majestic has like, I don't know how many producing properties. Let's say they have 5 producing properties. If one producing property goes down, First Majestic shares are going to drop. So in my opinion, there's no advantage to having multiple properties other than each property can have exploration potential. But if you have one really world-class property, single property, that's really all you need. You can grow from there. So I love Mag Silver. I think Mag Silver, that one single property, is like the foundation for growth. So now to go back to your question about high all-in costs, it depends how high they are. But for instance, I'll pick out one. Endeavor Silver right now has high all-in cost, and it's down. It's like around $2 or so. But they're losing money. I think their all-in cost is at least $20 right now. So, Endeavor Silver it looks like it's a very ugly stock, but it's actually a good risk reward stock, because like you said, if silver takes off, all of them are going to do well. But Endeavor has enough resources. They're one of the few pure silver miners. They have enough resources that they have enough cash flow that they could really explode higher. So you could see Endeavor easily go from 2 to 15. Wouldn't surprise me. So yeah, you're taking a risk that they could go bankrupt if silver prices don't blast off here. But I would rather take take the risk with them than take the risk with a smaller property that had fairly good all-in cost myself, because I like the cash flow potential, if you will.
And as we kind of wrap it up here, Don, any drill plays that you've invested in since we last spoke?
No. Let's talk. What are my favorite drill stories? Gosh, there's a lot of them out there. My favorite one probably right now is Lion One. Lion One is in Fiji, and they think that they have a multi-million ounce. It's totally high risk. Can they find the multi-million ounce? Maybe, maybe not. It's definitely a flyer. But that's one I like. I've seen some others, but I'm not going to mention them because the risk is a little too high. They don't excite me as much. 2 other ones that are somewhat drill stories. Guyana is somewhat exciting. They have a very large open pit, but underneath it, they have some really high-grade gold underneath. That's a bit of a drill story, I think, too. So Skeena is somewhat exciting, and I think that Ascot Resources, both these are in British Columbia, both of them are building mines, but they have a whole bunch of drill targets or high-grade drill targets around their mines that I think are exciting. So they're kind of long. So I like drill stories that are sometimes companies already have deposits, but they have additional exploration potential that makes them exciting. So, I mean, a drill result will always push the stock higher, no matter how big the company is. Well, it does depend on how big the company is, but a good drill result will always help a company or push it higher. And so the cheaper the company is, the more it can push it. So always look for, drill stories that get you excited, but don't underestimate a company that already is producing, already has a development story, but they have something exciting over here that they could find.
Go check out Don's website if you're not familiar with his work, goldstockdata.com. He runs a very affordable and highly insightful service, which I can attest to. Don, as always, I appreciate your insights. Thanks for coming on today's show.
All right, Bill, thanks.